Good afternoon, everybody. Welcome to Friday Afternoon Daily Recap. My name is Pete Renzulli, Chief Marketing Officer at T3 Live, as well as Associated Member, Class B member of T3 Trading Group. Interesting day today. We basically, our plan from this morning kind of followed through. It was interesting. It took a while to get there, and it seemed like all of the buying happened at the end of the day. We had mentioned that the longer we go without filling the gap this morning, we had said the greater the odds of follow through, and we're stuck in that situation again where a lot of traders that I'm mentoring or in emails back and forth are getting to the point, well, we're not exploding to the upside to follow through on the gap, and they're trying to justify short sale trades because we're not going up, but they could see a risk point. And later this afternoon showed the exact reason why that is not a solid trading idea, just because you can manage the risk. And for those of you that are watching the market intraday and specifically at the end of the day, we actually had a pretty good rally at the end of the day. But I do want to point out one thing that happened on an intraday basis that is definitely something to be aware of, and it's something called Dow theory. Now, back in the day, Dow theory had to do with the transports and the industrials. Nowadays, it's actually functioning between the NASDAQ, the spiders, and the Dow. So I just want to point out on an intraday 15-minute chart something that is something to keep an eye on, but not necessarily to change your longer-term thought process. Now, what we have here basically, here's yesterday's high in the spiders, and here's today's high. So you can see clearly the spiders took out yesterday's high here in the afternoon. You can see the diamonds clearly did the same thing. Here's the previous day's high, and here is where we ended up rallying through at the end of the day. And now we take a look at the NASDAQ. NASDAQ's not even close to the two-day high, and the more frequent you start to see this happening on multiple time frames, and obviously this is the intraday 15-minute chart over a two-day window, this is where the larger time frames can start to trickle out a little bit. What was basically what I'm saying. Now you can attribute it to Apple, which we'll get to in a second, being so weak, but it doesn't really matter why it happened. The fact that it happened did. The NASDAQ, the Q specifically, did not even trade above the opening price here in the afternoon, never mind taking out the previous day's high. So there's a little bit of relative weakness relative to what the rest of the market's doing. And we're going to go through a very quick list here where it's a pretty eclectic list where it's not necessarily only the financials or only this. I'm going to pull up a few stocks from both from the morning call as well as some stocks that performed very well in the afternoon with some room to go on some of these, some of them coming into resistance. But I just want to point out, it should be something that is in the back of your mind right now. Something a little bit is different if one of the market leaders like Apple still has not bounced to the upside and followed the rest of the market. So there is a little bit of a drag on that. So we'll go back to the daily charts and we will go head right over to Apple. We had mentioned this morning, gapped up, got above the key moving averages, pulled back, had not filled the gap yet, which was looking a little bit constructive. And within the first hour of the day today, we actually did end up filling the gap. And you can see here actually closing on the low. So this stock is still broken looking at it from the higher time frame. So regardless of how you feel like you want to handle volatility, make sure that you're trading in this particular case here with the higher time frames and with the trend. We had mentioned this morning that if you were going to start looking to get long in this stock, or if you happen to be looking, like I said yesterday, possibly getting long GG on a little bit of a accumulation on the bottom with heavier push to the bottom without further price movement to the downside, you must do it if you recognize that it might be termed like your B or your C trade, or like Scott calls a tactical trade, because you're trading against those higher time frames. And today was a really, really solid example of if you took that trade and put a feeler out there, you should not have gotten that hurt because it was only your tier one or your first probe. Or, Jesse Livermore called it his probing strategy, whereas within 5 pieces he would add to his trade as it moved in your favor. And the whole thought process behind it is you want to have the right shares at the right time. And that's definitely a right or down, or however you want to word it. You want to have the right shares at the right time. So as it's moving in your favor, you build into a position. If it's moving against you, you're not adding to the position, and the right shares is less shares when it's not working out. So Apple, although it didn't bounce with the rest of the market today, it's a really good lesson for you to add to your game plan and specifically your trading plan for how you're going to manage positions all the time. Add when it moves in your favor. A lot of traders will justify by remembering the one time it did work out and forget the other 9 that it didn't in an example like this. So Apple, even though Apple didn't bounce today, it gives us a great trade management lesson. So getting into some other stocks, LVS. LVS had some nice follow through today. You can see clearly, as I mentioned this morning, I like to look and see if a stock is at the right price of what it's supposed to be, and you can clearly see at just about $50 was the right price. We finally, excuse me, not 50, 47. Finally got above it, which coincided with the 200 EMA, and now we have 3 solid, nice days in a row. Yesterday was an inside day. Today clearly opened slightly higher, pushed through that 50, and now it's actually a pretty good move to the upside. Another one we looked at, United Technologies this morning, UTX, very, very similar. We could see the trading range was right around $82, $83. Now we're comfortably holding above those levels. Mentioned a couple of the financial stocks this morning, Goldman Sachs. We had said anything over 130, which we'll take a quick look at the weekly chart. You could see how clean this 130 level was. Back to the daily, we are now above it and comfortably above it. So basically we had an inside day leading to a breakout, which, by the way, inside day consolidation usually leads to a trend day. That's a chart that you should print out. That's a very, very simple but consistent chart pattern that's played out over the years. Inside day, multiple inside days lead to usually a really solid trend day, and we got a really clean one there. Citigroup, basically the same thing. Thought Citigroup yesterday might have been an exhaustion gap or island top, whatever you want to call it. There's many different ways to call it, and actually opened higher and slowly trickled higher again the rest of the day. If we could just take a look at the intraday chart to see what it looked like at the end of the day. Really clean, solid move into the end of the day with a pretty big spike. We actually did about 5 million shares here at the end of the day in volume. So it'll be interesting to see if that was a cleanup print off of the pushes that happened over the last 3 to 5 days. Moving down the list, United Airlines, another one. United Continental, whatever you want to call it. Solidly pushing up. We had a nice breakout of this trading range again. I hope we're starting to see some of the patterns that I'm calling out here. If it's the right price and it's not breaking out of that range, let it prove to itself and get out of the range. You don't want to get chopped up in the box. And this is a really good example here of above 2150, finally broke out of there, held above there, had a nice light volume pause again. Although it was over the holidays, it doesn't matter. It was a clean technical pattern, and now we have a nice 3 or 4 day run to the upside as well. Two other interesting. Capital One just cleared this $62 level, or it's literally right there. So above this, if we go out to the higher time frames, you can see what this means from a yearly perspective. So have an alarm set for Capital One at COF at $62 on Monday. Another one, STT, State Street. Very, very solid move. Looks very, very similar to Citigroup here, although it was a little bit more of a trading range than Citigroup. Citigroup had a little bit better uptrend. We spoke a little bit about GG being a broken stock today, pushed down to the support level, and ultimately ended up I shorted it right out of the gate this morning, bounced on me quickly. I took a loss and didn't get back into it. I was looking for it to push through that low and have a trend day down. Did not follow through. Another one, solid on the upside today, Mosaic, MOS. Again, nice, clean consolidation after it had a nice push to the upside. It seems to be holding this level right now, which is right around 55. Had a nice day after the fiscal cliff talk and seems to be holding comfortably now above this level and a really solid push up. Now, the one thing to consider is if you start looking to get long this stock, you can see this pretty solid resistance at 62. So the game plan or the thought process should be trading it long, whether it's a swing trade or continuing to be in the trade, get out into momentum up into that 62 level, and then you reevaluate up in that level. But the interesting thing about the list is we're all over the map, all over the S&P 500, so to speak, not necessarily in one little sector or industry. It's all over the place. So we're seeing some buying on many different fronts right now. And from an intraday perspective, as of right now, we're seeing very, very little aggressive selling. We're getting maybe a half an hour's worth of selling. We're hitting a spot where the buyers are coming right back in, and we're heading right back up to the top. Speaking of all over different sectors, OIH at 40 has been a level that I've been watching, and you can see here pretty clearly we finally have a couple of closes right at or above that level, and today was pretty significant, pretty cleanly above that level. So it's going to be interesting to see if we flag above this level, look for another push to 41.75, ultimately to 44, and maybe start something, or if this is just following the rest of the market and catching a bid there. But the thing that's interesting to me is it's so diverse of the amount of stocks that are opening at one spot and closing so far away from their opening price, which should indicate intraday buying in addition to the longer term trends. And last but not least, to finish out, looking at many different sectors here, we're looking at Prudential, nice gap up after the fiscal cliff, and again, holding it. So it's going to be very interesting to see how we unfold next week. Does short-term profit taking come into the market and pull the market back a little bit, or as Mark Sperling likes to say, it just needs to digest it a little bit before we have another move to the upside? It's going to be very interesting because clearly the last 3 to 4 weeks has been so headline driven. headlines kind of out of the way a little bit now, but we're seeing the effects of the catalyst of the resolution. So whether you're a fundamental news trader, however you want to word it, versus just a technical trader, both of us have something to feed on right now. The catalyst of the fiscal cliff news kind of being priced in now and affecting the current prices we have. So if you had an opinion on how that was going to unfold and you took positions, whichever direction you took it on, if you were long, you're looking okay right now from a fundamental perspective. If you're taking long positions because of the gap up, technically, you're finding some pretty decent spaces intraday to get some positions on. And just to give you an example, I'm talking about from an intraday basis, we'll take a look at UAL here. You can see what it did at the end of the day there. You don't even necessarily need to be trading massive high beta stocks. That's a pretty decent move at the end of the day there. So intraday movement in the direction of higher time frames caused by the fundamental catalyst. It seems like there's a bunch of things on the same page right now. So if you're tending to be in the camp where you feel like we move too far, too fast, and again, I'll show you one. We'll finish up with the chart of the VIX here. Sorry if I keep talking close into my microphone. Go out to the daily here. You can see it's had virtually a 50% or so haircut. Let's say it's 40%. I don't know the exact percentages, but if we go out to the monthly chart, the VIX hasn't been down at this level in almost 5 years, if not just as long. I think 1358, if I'm not mistaken, was the low, 1330 in that area. So whether or not you believe the VIX is a solid function in the market to call direction, some people say the lower it gets, the market has to reverse, when it's really just a matter of its increasing or decreasing volatility. As you expand, you could possibly pull up, pull in the higher you go. That's general thought process on an intraday basis from fear and greed. But I will tell you this, the call that we made this morning in the morning call about the trading ranges decreasing as the VIX goes down played itself out today. The spiders had virtually a 20 or 30 cent trading range for the majority of the day until we just broke an ascending wedge to the upside and finally had that pop to the upside, and a lot of other stocks did too. So just following up on what we talked about this morning and adjusting your trading plan and share size to compensate for the increase or decrease in volatility using the VIX is a good thing to add to your trading plan. So across the board, we've had some buying today. We didn't have that real spiky intraday momentum that day traders like, but if you're a little bit longer term swing trader and you're hanging on to positions, seems like the last few days you should be a little comfortable. We haven't even come close to filling some of the gaps. So early next week is going to be very, very interesting to see if we consolidate or pull back a little bit. But either way, it's pretty constructive action right now. So have a nice weekend, everybody, and we'll see you next week.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.